we see it as more risky to not be taking risks and learning. It's better for us to lose money and have learned a really good lesson than for us to have not taking that risk and potentially risk losing our whole business later because we weren't constantly learning and iterating. That's a big thing for us. And we do have fear. It's just different for us. We're more afraid of losing the entire business because we got lazy about learning, and we'd rather lose, I guess, comparatively a little bit of money here and there. And sometimes we do have big losses, like say we make an investment and we completely miss time or we mess something up. It can happen, but it's not really a big deal if we learned a lesson. And to me, that's fairly valuable, especially if you learn the lesson, relatively speaking, inexpensively and early on.
Welcome to the Strategic Momentum Podcast, the show where we share tips, stories, and advice from progressive leaders on what it takes to break through that business inertia and propel you and your business forward. I'm your host, Connie Steele. Mehtab Bhogal made $500,000 doing business on Facebook before he was 22. And that's just the tip of the iceberg. He followed that up by successfully launching and scaling several bootstrapped direct-to-consumer brands in eCommerce ventures to over 7-figure revenues within 12 months of inception. Today, Mehtab is only 25 and co-founder of the private equity firm Karta Ventures. In the first part of this 2-part series, we will examine the uniquely millennial business mindset that has guided Mehtab and his firm's approach to building successful businesses. They'll share their unconventional philosophy related to partnering and finding the right people, as well as their specific way to create value and drive business growth in today's fast-moving business environment. We'll start with his career journey.
So I started off just essentially buying and selling guitars for fun, just through eBay, Craigslist, various guitar forums, initially to try out nice guitars that I wouldn't otherwise be able to afford. And I had no intention of starting a business or anything. It just ended up being relatively profitable. So I just kept up at it. And from there, I started an online community with a friend of mine that I met through buying and selling guitars. We just bought and sold to each other a few times and ended up working together on to create a community. And back then, Facebook organic reach was really good, so our timing literally couldn't be better. We scaled that to a 6-figure user base. After that, we started working with our community as well as retailers and brands to offer exclusive products to our community. And it was a win-win because our community wanted specific guitars that just weren't being made at the time. And for the retailer, it was a pre-order basis, so there was no real risk to them. And the same deal with the brands, they could actually offer the guitars at a lower price point. So it was a win-win because the customer gets the product at usually a lower price point, as well as with specifications that weren't already available. And we were obviously able to take a commission on that. And then later on, we ended up cutting the retailers out and becoming the retailer ourselves, just so we had full control over the customer experience. Just because we'd run into various issues where the retailer was maybe wrong on a few things, or just too slow to get back to us. This let us kind of speed things up and scale that fairly significantly. And then simultaneously, I had a reputation management brand I launched with a friend of mine that primarily worked with public company CEOs. And at the same time, he launched a men's hair product company that I ended up working on quite a bit. It's kind of a founding advisor and ended up CMOing/VPing for a bit. After that, I launched a direct-to-consumer brand /digitally native brand called Horizon Devices that did 7 figures in pre-orders as well. From there, I kind of transitioned into the investing side and more of a private equity approach with some people I met off of Reddit, of all places.
Wow. And when did you start all of this?
While I was in college, so 2011, 2012.
And how old are you now?
25.
Wow. So you certainly haven't had a traditional path in terms of building your career experiences. And in fact, it seems like these opportunities to do something different, better, and maybe dare say non-conventional has been a driver. So where does it stem from?
When I was 17 or 18, I got diagnosed with spinal stenosis and degenerative disc disease, so I couldn't really work a conventional job, which meant I had to think a little bit more creatively and just figure out other ways of generating money. And the chronic back pain also meant, for example, like you can't work 9 to 5 traditional hours. You can't stand for long periods, et cetera. So I had to kind of work around that. And I got really lucky because it all kind of went away magically. Literally super lucky. Yeah, so that's kind of what forced it, as well as not really having much capital to start with. I think it forces you to use creativity to get around a lot of hurdles. So for example, instead of instead of going out and using debt, because as a 19, 20-year-old, you don't really have access to debt to fund inventory for a retail store, we ended up using that pre-order model to get around that whole requirement. And at the same time, kind of pushing that is just a constant need for challenge, learning, getting to try new things. And I think just by doing things, you gain a lot of experience that helps you kind of think outside of the box. So I think a lot of it just stems from the need to experiment and satisfy ongoing curiosities. So for example, when we saw, and also just certain frustrations we've run into ourselves. So on the guitar side, it was, oh, hey, we can make this guitar. We just have to apply more pressure to the brand, but the retailer wasn't doing it. So we said, hey, why don't we just become the retailer? Cut them out. It was just kind of frustrating because people were moving too slowly. So it's a mix of both, and also getting the chance to work with incredibly bright people. That's always amazing. I get to meet people like you, which is really cool to me.
Mehtab probably would have been bitten by the entrepreneurial bug eventually. He clearly has a knack for it, but he first started reselling guitars online out of necessity. Chronic back pain meant he would likely never be able to work a typical 9-to-5 job, and he wasn't lucky enough to have any starting capital. So he started thinking creatively. However, this out-of-the-box perspective has become ingrained in the way he does business. And as you'll hear, all of the businesses he invests in and advises in are better for it.
All of that then eventually has led you to now being on the investing side. So tell us more about your current company.
So my focus for the last year, I'd say, has been Karta Ventures. And we're essentially a team of experienced entrepreneurs and operators that leverages our experience, financial capital, as well as our network to help any entrepreneurs we invest in grow their companies both quickly and sustainably. And I think we have a little bit of a unique approach to it because myself, my main business partner, we both bootstrapped our businesses. We never took VC or angel money, which is a bit weird because now we're on the investment side. And we constantly tell people not to take money. But I think our main value add beyond just a check is what we can do on the ops end. We don't really look for a 100x. Like it would be nice. So we kind of bypass the traditional venture capital model. And I suppose we take more of a private equity approach where we're focused on cash flow, because I feel like cash flow is very underrated. It has the power to compound quite a bit, and you can go out and get non-recourse debt, for example, and scale a company much faster than most people realize.
I think Mehtab's success is reflective of the millennial mindset in business. Working within the established systems and doing things the way they've always been done isn't always the optimal approach. In fact, in our rapidly changing environment, it often isn't. Millennials understand that in business today, we have to take small risks, test new ideas, and learn from what works and what doesn't. That doesn't necessarily mean taking huge risks, but doing nothing in their mind is a bigger gamble than the learning that's gained through trial and error.
Do you feel that fear inhibits any of your decision-making when it comes to investing in a new business, or maybe in the past, you've personally building your own businesses?
For us, we see it as more risky to not be taking risks and learning. It's better for us to lose money and have learned a really good lesson than for us to have not taken that risk and potentially risk losing our whole business later because we weren't constantly learning and iterating. That's a big thing for us. And we do have fear. It's just different for us. We're more afraid of losing the entire business because we got lazy about learning, and we'd rather lose, I guess, comparatively a little bit of money here and there. And sometimes we do have big losses, like say we make an investment and we completely miss time or we mess something up. It can happen, but it's not really a big deal if we learned a lesson. And to me, that's fairly valuable, especially if you learn the lesson, relatively speaking, inexpensively and early on.
Failure for you is never really failure. Failure equals a learning lesson. Failure equals, an opportunity to gain knowledge and insight, versus failure for many people is something that holds them back, or a fear of failure.
Yeah, exactly. I think that's a good way of saying it. Like, a lot of people are afraid of failure itself. And it's certainly not good to fail. Like, you have a lot of people in Silicon Valley saying like, yeah, fail fast, fail a lot, which is pretty stupid. Like, it's better not to fail at all and avoid it. But when it does happen, it's just something that's inevitable and we know is going to happen. Like, probably 80% of our ideas just fail. But it's ensuring that we're being asymmetric in our approach so that when something does fail, our losses are minimized, which is why I like micro testing. And when something succeeds, we really win hard. And it's something that's scalable. So it pays for all the failures essentially. But a big part of that is making sure that when you are taking a risk, you're not betting the house. And I've bet the house before, which is good. But it's ensuring that you've run tests first to make sure you're at least pushing in sort of the right direction before you do it.
And those tests are really all about helping you pivot, right? That you don't always know.
Absolutely.
And that by getting more and more pieces of information at every step of the way, you're able to pivot faster and hopefully get to the outcome that you want with more reliability in the end.
Yeah, absolutely. And I think it's really hard to know what'll work and what won't work without testing into it. Like I've had concepts or businesses that we executed on that just straight up didn't go anywhere. And then I've had really dumb ideas for businesses that I thought were terrible and I really didn't want to do, that I just kind of did and they ended up working really well. So one thing I learned is that you don't know what'll work and what won't work, especially the investment side. We've had that happen too, where we invested in a company that we didn't think, or at least I've invested in the company with the rest of the team that I thought just really wouldn't work, but it totally worked. But we structured the deal right so there wasn't much downside. So there's no point in not doing it. And that's more what it is, I guess. It's just the structure around how you take risk and then how you assess risk, and limiting your downside while increasing your upside is really a big part of it. And I think it depends on the individual person too. Like everyone has different tolerances for risk, and it's really learning how you yourself deal with it and behave. Like I have a few friends who are operators where they're entrepreneurs full time. They focus on one business. And for me, that's really risky. I couldn't deal with it, but I have no problem risking all of my money on various companies. But that freaks them out, for example. It's just it's a different, and one's not better than the other. It's just a different way of thinking and what their risk tolerance is or how it's structured. I think you have to really get to know yourself. And that's just kind of part of the whole process.
Right. And it sounds like too, building a lot of flexibility into, your own process, your own personal life, the things that turn you on seems to be a critical factor too.
Yeah. I mean, you don't want to be I think it's really hard for someone to work at something for, put real hours in, like anything above 80 to 120 hours a week. And it's just not sustainable unless you really love it. None of us that I know of on the partner side really got involved because we want a lot of money. I mean, it's a nice little side effect, but it was more just, well, for me at least, it was getting to work with really intelligent people, and it's just cool seeing some of the stuff they do, as well as the founders we invest in. They do so many cool things. I love working with them. I love hanging out with them. If I lived near them, I'd hang out with them every day. And there are one or two that are new to me, and I hang out with them fairly actively. And it's kind of a total mix of personal life and business, which some people think is bad, but I don't think it's really a big deal. And a lot of the entrepreneurs I know don't think it's a big deal either. Especially, I feel like if you're going to be working a lot, you should make sure you enjoy it. So there's no distinction for me. I love it all, other than when I have to do accounting or something brutal like that.
How much does making a difference in changing the game play into the way you guys work and invest in companies?
I think just ensuring that we can really help grow the business is huge. We've come across businesses where, it was a good deal on paper and we could make money on the deal, but I didn't feel it was really justified I felt it would be a bad deal for the entrepreneur that we'd be investing in. So I just straight up told them, like, hey, look, we can't add enough value, but I do know of a group or someone else who would be a better investor and better suited to help you grow this business. Because what's going to happen is we're going to write you a check. You're going to make us a bunch of money, but then we're going to be useless after that. We're going to be dead weight on your cap table. But I know someone else who can write you the same size check and deliver way more value and be useful to you on an ongoing basis. So I just prefer to do that. And everyone appreciates it. And it's always kind of paid back eventually, just through a referral or something. And I don't think it hurts, to be honest. It really saves you time and money.
Is it something that's just inherent to you and Alex and the others at Karta Ventures to constantly find ways to change the game with the businesses that you're in and not pursue the very conventional ways to, launch a product, create a product, or build a service?
Yeah, so for us, it's less about disrupting or trying to do things in an unconventional way, where it's just, we see it as a more practical way to us. It seems easier and more practical and like a more logical pathway to follow. But of course, it ends up being fairly unusual. which I think is also a side effect of, like, I don't have any formal business training, neither does Alex. He has a journalism degree. I dropped out. The only one with an MBA. So Orlin and Blake both have formal business training, but they're very creative as well. Like Blake's doing his MBA at Wharton, for example. But nobody thinks, I don't think anyone on the team really thinks in a linear way. We just think more, I don't want to say not linear, but we tend to be more practical, and that can end up being unconventional sometimes, as opposed to thinking within a system, if that makes sense.
Absolutely. And do you think people too often get caught up in that systematic way of thinking and not truly breaking the mold and trying to turn things on its head?
Yeah, absolutely.
From Mehtab's point of view, starting and growing a strong business doesn't necessarily start with a significant amount of capital. In fact, he and his business partners believe quite the opposite. Further, micro-testing is core to their business process because being data-driven is foundational to how Mehtab and his partners have grown their own respective businesses. Other important tenets are that they are value and purpose-driven. They're focused on helping the companies they invest in truly achieve their mission. And for them, it has never been about the money. They have a reputation for being honest and transparent because in their eyes, it saves them time and money. And there's a passion around learning and growing at the same time. And that is endemic to who they are.
So let's also talk about the various tenets in building a strong business. You and your firm have a particular approach to that. And let's talk about, your philosophy or mindset. I mean, you spoke to a few of those things, but I know there's some others that are quite important.
Yeah. So the biggest thing for us is, again, just being able to get around the requirement for capital. So a lot of times the company will come to us and they'll say, hey, we need $1 million to do X, Y, and Z. And we'll point out, well, no, you don't need $1 million. You need like 200,000 or maybe 600,000 to solve problems that you've kind of approached us with. It's just a matter of thinking a little bit outside of the box. So for example, instead of going out and raising pure equity, we show them how they can grow the company to a certain point and then just raise non-recourse debt that they're not personally liable for, which means they get to keep more equity. And obviously we get more equity too. So it's a win-win. And there's no real additional risk. And the pressure it puts on the company isn't really significant. Especially when you compare it to the traditional restrictions that a venture capital firm might put on a company, it just keeps things a bit more open and easier to manage. So that's probably one. And then we've always, I think, getting really good at micro testing and showing founders how to micro test effectively is a big thing, especially for startups and early stage companies. It's really a matter of, say on the marketing side, you want to figure out how you can scale a specific campaign. It's about figuring out what tests you want to run and how to do them most cost effectively, so that you can avoid burning all of your capital and find a real scalable channel. Because the cool thing about digital, especially with paid channels, programmatic advertising like Facebook or Google, for example, is that you can see how many dollars are coming out of your current ad spend. So it scales beautifully. You just have to make sure it works. So to get it working positively, you have to start with small tests. Like you shouldn't just go all in on one channel. It rarely works. It just seems a little asinine when you can run a small test first and put a few more hours of work into it to avoid burning everything. And that's just kind of that's our general mindset when we approach anything.
So it sounds like a very data-driven mindset specifically.
Yeah, absolutely. We're very data-driven. So for example, one brand that we launched recently, instead of doing the traditional, hey, here's our idea for a product, we like it, so everyone else will like it. Instead of doing that, we ran Facebook ads, pushing people to a few different concepts we had for the brand, as well as the value. And based on the amount of clicks we had and the user activity on the website, that's the direction we launched the company in, as well as the product. So originally it was going to be an energy product we didn't know if it was going to be for gamers, programmers, stock traders, or salespeople. It ended up being salespeople. But we didn't know what to do at first. So we used that data-driven approach to do it. And I think it's so sensible. It's very inexpensive to do. There's no real excuse for not doing it. So.
And also tell me about another, I guess it's called kind of core philosophy to who it is you guys are. In previous conversations you and I've had, I know that you guys seem to be very purpose-driven. So share more about that.
Yeah, absolutely. I think a big part of what we do, since most of us at the partner level in the firm, we all work more than, like a low hour work week is 80 hours, but we've gone up to 120 for as long as we can sustain it. But for us, it's not really about the money. It's a nice side effect. It's more about having the opportunity to work with really smart people and inspiring people and getting to learn from them and just kind of helping them do what they're doing and assist them on their mission. So for example, one founder we had the opportunity to invest in, he's brilliant. He's doing really cool things. Like he's plugging into the API for weather.com to automatically adjust AdWords bids in real time. That's so brilliant. Like I never would have thought of that. And it's so cool hanging around him. I don't really consider it work when I'm talking to him because I learned so much and it's just very stimulating. Being able to come in and add operational expertise and value to what the company is doing as opposed to maybe financial engineering or just figuring out how to get ourselves the fattest paycheck possible, I think is a better approach, especially since we take a fairly long-term focus on the company and we tend to come in when the company is smaller to where it's almost not, initially, at least for the first month or so, it wouldn't make sense on paper as an investment given our time that we're investing. But we know once we add our operating value, we can grow the asset to a certain size, and then obviously the math works out. So that's the approach we take. I just feel it's more of a win-win, and everyone's more aligned, and it's just a better experience for everyone that's involved.
With your culture of creativity and experimentation, you guys obviously are moving quite fast. How do you maintain alignment with your business partners and even the people that you are supporting, some of these entrepreneurs? Because there can be multiple opposing ideas and approaches all at once.
The big thing for us, just ensuring everyone we work with is very data-driven. And by no means does that mean we're all good at math. I failed calculus twice, so I'm definitely not good at math or stats. All I know is that if R is over 1, there's a correlation. I think we rarely disagree over what to do. It's more about how we collect the data to make our decision and the decision-making process as opposed to the outcome, if that makes sense. Yeah, it's just ensuring everyone across the board respects data and doesn't really make decisions based on emotion. They focus more on, hey, this is what our customers are saying, so we should do it. We're obviously not smarter than our customers.
Well, it's great because I think a lot of people lose sight of the fact that, they are not their customer. So they make decisions based on their own personal preferences versus the target audience that they're trying to go after.
Oh, absolutely. Especially at the executive level. Once you start talking to some executives, they can be very out of touch. We've run into that before where it's someone who's running a discount retailer, but they're driving a Ferrari. And it's like, well, you're not really your target audience. So I'm not sure why you're trying to tell marketing what to do or not using a data-driven approach to what you do. So we always ensure everyone we work with kind of respects that and knows that ultimately their decision-making should be informed by data.
For Mehtab and his partners, what matters is creating value. For their clients, it's about creating sustainable growth models with low risk and modest startup costs. For customers, it's about delivering products they actually want instead of pushing out products and trying to create demand for them. And building a successful venture that creates this kind of value starts with having the right people, not ideas, tactics, or even strategies in place. The decision makers have to be aligned around the same goals to get a good fit and create a culture that will last. Forming an all-star team isn't always easy, but Mehtab and his team have applied their non-conventional approach to also finding the right talent and growing their team.
Let's talk about your business partners' relationships and the people part of the business. What's been interesting to hear is that you've built all of your business relationships without ever formally meeting someone. Tell us more about that, as most of us still want to have that face-to-face versus making decisions on an individual being totally virtual.
For me, a lot of it, I guess, has to do with growing up around meeting people online. I first started posting on internet forums probably when I was 8 or 10. Specifically for a video game because there was no tutorials available back then. There was no YouTube. So I had to make a text-based post on an internet forum to get help. And it was a very niche video game. That's kind of, I guess, where I got comfortable with it. And maybe just it's probably good to get background in terms of how my partnerships have been structured. The first few companies, I met most of the co-founders just online through buying and selling guitars. And we'd obviously never met in person. And then on the investment side, what I realized when I first started off, it was just myself trying to focus on more of an angel approach as opposed to private equity. I realized that nobody's really going to come to me as far as deal flow goes. They're going to go to kind of more established angels in the area, as well as venture capital firms. So I thought, hey, I have to go somewhere where nobody else goes. So I ended up on Reddit. I made a post looking for other people, for companies to invest in. And then Alex, who's one of our co-founders, reached out and he said, hey, look, I'm in the same boat. I just had an exit. Why don't we work together? And I said, sure. And instead of talking for 20 minutes like original plan call, I think we ended up talking for 3 or 4 hours. And we invested close to, I think, $250,000 together before we met together for the first time, which is kind of weird, I suppose. But
very non-conventional.
I just found it just
very, very non-conventional.
Yeah, absolutely. I mean, like, obviously I've seen him since then in person. Like, I was just with him in Texas literally earlier this week, eating 5 pounds of meat between us, which was wonderful. Great barbecue, but probably a little bit too much food. Yeah, I mean, just given all the technology around now, I don't see, I mean, obviously I like meeting people face to face when it's possible, but I found we can move at a much faster pace and get to work with much higher quality talent just by doing things over the internet, really. I mean, he's in Salt Lake. My other partner, Kat, she's in San Francisco, and then Orland's out in Los Angeles. We just brought Blake on, who's in Philadelphia. So we're all over the place, but we talk daily on the phone. It's just, I don't know, it's not something I really miss too much, if that makes sense. And I guess as far as the structure side goes, on ensuring that everyone's kind of aligned, yeah, I think a lot of that, especially for our operating team, when that's not centralized, a lot of it's just being, we're fairly upfront when we hire people. We tell them, hey, look, this isn't for everybody. For some people it'll work, for some people it won't. And you're either in or within a few weeks we'll know if you need to go. And they're always fine with that. I find just being really honest and transparent with people helps a lot. So yeah, it's worked well.
Do you think that the traditional approach to interviewing somebody and then evaluating them based on, that series of interviews is somewhat outdated versus you talk to them, see if being upfront, and then it sounds like trying them out, that might be a better approach?
The big thing is, we'll obviously have an interview with them initially just to make sure they're at least somewhat there. And then kind of bringing them on in some sort of capacity, seeing how we work with them, ensuring that everything goes smoothly. And then sometimes we even offer them money to quit, which is something we stole from Zappos, the shoe company, the shoe retailer.
Right.
And that's a good way to see if they're really interested in doing, if they're passionate about what we're doing. So if they're not passionate, they're going to burn out fairly quickly. And this is just something we've found you can only really do by testing people on the job. You can tell someone they're going to be working 80 to 120 hours a week, but they don't know if they can do it until they're there. And we tend to move fairly fast too. It's not really a normal pace of work, which is good for some people, but other people really don't like it because you have to learn a lot quickly. Yeah, so I've just found the interview typically it's not a great indicator of how someone will fit in culturally. So we try to structure things so that if they have to go, they can go quickly. Or vice versa, to where if we want them more involved, we can get them more involved very fast.
So the idea is to try to quickly evaluate that person in real scenario to see if culturally they're a good fit for both parties and deciding to, cut ties quickly versus letting this potentially drag on. Yeah,
absolutely. You nailed it.
Do you think there's a misconception that you have to do things in a co-located fashion or to have enough frequent in-person interaction to be successful in many businesses today? Why do you think that folks have a hard time around that notion?
I think a lot of people haven't really tried it the other way properly, or just the way a traditional business is structured doesn't really lend itself to this. You have to adjust the core structure. And also, obviously, it depends on the exact nature of the business. So if you're manufacturing, obviously, everyone kind of sort of needs to be in the same place if there's a manufacturing facility. But if you're doing something like some of those brands, for example, they don't do their own manufacturing. They outsource it, and then they ship to 3PL, and 3PL deals with that. So if you're doing something like that, you don't need to be centralized, really. I think you need to interact with each other. But doing it over the phone, I think, is more than enough. We don't even do Skype calls. Like I never did a video Skype call with Alex before we invested together. It was all just over the phone.
Really?
Which is, yeah.
Wow.
I didn't really feel like getting ready to see him, so
So body language, seeing somebody and looking at their body language and getting that familiarity with that person, because that's a more intimate way of getting to know somebody. Just having a phone conversation is sufficient for you.
Yeah, absolutely. We've invested in a few companies without meeting their founders at all in person. And obviously we try to see them in person, but most of the time it just ends up being faster and more effective if we just go ahead and make the investment. But we've never been scammed or still had money stolen from us yet. I'm sure it'll happen eventually, but it hasn't been an issue yet. And the cool thing too, for the companies we're investing in at the stages they're at, so typically they're doing between 1 to 20 million revenue. At that stage, you can tell fairly quickly if there's someone who's honest just by how they treat their employees, for example, and how they treat the people around them.
And are there certain sets of questions too, when you first meet them, that help you evaluate very quickly whether or not they're going to be the right fit, have the right attitude and the same values and so forth? Because I know you've talked about the fact that it's about delivering value. And then ultimately for you guys, you worry about your own personal compensation later.
Right. Yeah, absolutely. So we just want to make sure they have the same mindset we do, where they're putting the company ahead of themselves, which is what we often do. So for example, we had one company that we effectively lent money to, but they needed more bandwidth. And we knew that if we held off, effectively calling the debt, the company could grow way faster. So we just held that off, and we could have pulled that and put ourselves first, but we didn't really see the point. And then kind of at the same time, the founders did the same. They sold a little bit of equity so they could pay themselves more money, but they reinvested it in the company as debt with very low interest. It was just really nice of them to do. Everyone was completely aligned, which is good. And that's what we look for. And we do have a certain set of questions that we run people through. But the best indicator tends to be what they've been like historically. So if they've done something like live completely Spartan and eat nothing but cans of tuna and hot sauce, it's a pretty good indicator that they're willing to put the business first.
The mindset Mehtab and his team have for building and scaling businesses may seem unconventional, but they see it as moving towards a more practical or logical pathway. However, there's a lot we can learn. Focus on delivering value first, and that may not even begin with what you have to offer. If there are others that can deliver more value to someone's business, then share that. Because from Mehtab's point of view, the best way to make money is to be honest and value-driven. The fear of failure also shouldn't hold you back from taking risks. Many of our business ideas will fail, so we just need to be more strategic about our approach, while at the same time learning from the failures that do happen. And that doesn't imply betting the house and racing to fail fast either. Look to data when you don't know where to start. Create structure around how you approach, manage, and assess risk. That will allow you to limit the downside while increasing your upside. And when it comes to staying agile, you may even have to apply this mindset to how you find and hire people. Maybe you don't need to do a formal interview. You don't know what will work and what won't work until you try. Thanks for listening to the Strategic Momentum Podcast. You can connect with Mehtab on LinkedIn and learn more about Karta Ventures at kartaventures.com. And be sure to tune in to part 2 of our interview with Mehtab, where we'll continue to dive deeper into that millennial business mindset and learn more about his perspective with respect to audience targeting and insights, product development, and marketing in order to drive your business forward. If you've liked what you heard, please subscribe to the show on Apple Podcasts, Stitcher Radio, Spotify, or wherever you get your podcasts. And while you're there, please leave us a review. This is what helps others find the podcast. To hear previous episodes or get show notes from this episode, you can visit us at flywheelassociates.com/podcast. And don't forget to give us a like on our new Facebook page and follow us on Instagram. I'm Connie Steele, and you've been listening to the Strategic Momentum Podcast.